Chicago, nicey, and you're based in Atlanta. Come on.
Yeah.
How? Why?
Well, we own 12 exchanges around the world, so doing a deal with the Chicago Exchange will be our 13th exchange. It gives us an opportunity to have a presence in Chicago. Really, the exchange business today is very technology-oriented, and Atlanta has become a very tech-centric city. And so we can sit here in Atlanta, Georgia, and operate exchanges around the world, and Chicago will just be the latest example of that.
Did you decide to come to Atlanta because of tech?
It's an interesting story. I'm a serial entrepreneur. I was actually living in Beverly Hills. I was running another company that I had started, and I saw an opportunity to bring some transparency to the energy business. I saw a little failing company that was here in Atlanta, and I acquired it. I came out on a Monday morning, and there were 47 employees, and I announced that with all my West Coast bias that I was going to move everybody to California, thinking that they were going to be thrilled. About an hour later, a person came to me and said, "We've talked to everybody, we've all decided to quit." I realized then for the first time how strong this community is. And recognize that if I was going to build this business with that group, that it was going to be incumbent on me to move to Atlanta, which is what I did. So there's an ethos down here. There's a Southern charm that really does exist in the business community as well as with your neighbors. And people that are here love it. And I've found that I've been able to take this little company and build it into a Fortune 500 company. By attracting people to come live and work in Atlanta. So
a $40 billion market cap. Like, that's clear. I mean, talk about a huge company. That's a huge company.
It's a big number for me, too.
Yeah. Where else do you want to then expand to? So 12, 13 exchanges all across the world. The CME just announced a deal to buy Next Group. Right. Where do you feel like you need to compete the most and add more?
The real growth in our industry has been in a lot of what you do as well, which is provide data and information. People that use exchanges are managing risk and making investment, and information today is key. So what we see now, just the last thing I did before I came on set with you was shut my smartphone off. And the first thing I'm going to do when I leave here is turn it back on. Like, I literally in my life can't be without real-time information. And that same trend is going all throughout the world through business. And so in order to manage risk, our customers are grabbing information, consuming it, using all kind of analytics, this move now towards AI, to figure out what's going on in the world, and then how do I position myself largely on exchanges to manage that risk. And so that's where the growth is, and you're very well positioned for that as well.
So talk about how you position yourself in the exchange business specifically. And as Alix just mentioned, we now have CME buying Next.
Yes.
Gives them a leg up in treasuries.
Yes.
You've invested a lot in fixed income. How much of your future growth is going to be in fixed income?
A lot. The bond business broadly is still a telephonic business. It's a complicated market, and it's in the process of going from analog to digital. So those of us with digital platforms and global distribution are all moving into that area to provide tools and technology to our customers. There are a lot of different debt offerings in the world. But there's really now a much more interest than ever, let's say, of people holding debt. We have the emergence in the U.S. of exchange-traded funds, ETFs, that are filled with fixed income and bond instruments. Many of those list on the New York Stock Exchange, and so we have a nexus to those people, and we're working with that group to figure out how to get better data and information and technology into that space to make it easier for people to consume.
And speaking of, MiFID II has really helped your business in terms of live pricing, other services that traders might need. Does that continue if big banks try and capitalize that with their own periodic auctions? Like, can they cannibalize some of that demand?
I have two minds on MiFID. I think it's a really overbearing piece of regulation. I think it will stifle growth. But it is demanding that consumers have a lot of tools to comply with it. And my company's in the business of providing tools. And so we're doing very, very well, even though from a purely political standpoint, I don't think it's good public policy. Oddly, I think it's actually going to export itself to the U.S. and to Asia, because once large investors change their workflow, they tend to want to do that globally. So I think the workflow will change in Europe as a result of MiFID, but some of the good things that will come out of that change, some of the technology consumption that will come out of that change will be exported.
You're the chairman of the New York Stock Exchange.
I am.
One of your titles. We just had not an initial public offering, but an initial listing, essentially in Spotify. We know that some of the banks didn't do so well, they didn't get the big fees because they IPO. How does it affect your business if people start doing it that way?
It's hard to know. I mean, Spotify was an interesting company because it didn't need to raise capital, and the New York Stock Exchange has been around for 226 years, almost as long as the United States, and it's been a capital raising venue. And really, for the first time, we've seen somebody that said, I want to be a public company, but I don't actually need capital. Whether that's an anomaly or the beginning of a trend is hard to know, but one thing you do see is capital is available to private companies today in a way that it's never been. And you know, a lot is made about the fact that there are less IPOs today than, let's say, during the last technology boom. But in the last technology boom, in the dot-com era, companies were going public to raise capital as a primary vehicle to raise their capital. Today, those same kinds of companies can raise capital in a private market. By the time they come to the New York Stock Exchange, and we've become the leader in tech, I think we did about 89% of the tech proceeds last year, they come because they have very complicated ownership structures and very complicated cap tables, they call them. And they need to turn over their shareholder base. And those IPOs are much more complicated than the ones we saw 20 years ago. And they lend themselves to the floor and screen capabilities that the New York Stock Exchange has. You probably saw the Spotify IPO. It took the entire morning to place that IPO. That was a combination of tech and humans. Telephones, keyboards, that really got that thing done.
Well, talk about complicated. How about a Saudi Aramco IPO? How do you market for that? Like, what would you do to be like, in this with us?
We feel like any large company that wants to touch large capital markets should be in the United States. And I don't mean Saudi specific, I literally mean any large company. We have the deepest, most liquid capital markets in the US. So if you really want to raise large amounts of capital, this is the place to do it. And that is the message that we take around the world.
The reporting, at least, is that Saudi Aramco is somewhat hesitant because of the disclosures, particularly in US exchanges, not just London, but particularly in the United States. As you talk, or somebody at the New York Stock Exchange talks with somebody responsible for the Saudi Aramco, is there any room for maneuver? Is there any room to say, well, okay, we'll change this a little bit, we'll let you off the hook a little bit? How does that work as a practical matter?
Well, as you mentioned, I'm a public company CEO, and public companies have their own legal challenges. There's a lot of disclosure that we all make, and there's a lot of challenge to what we do, and that's part of being a public company. And I don't think we're going to change the environment per se for any one company. I think it's good to have that dialogue. Is the balance right? I think the Trump administration is trying to roll back some regulation. Even under the Obama administration, there was an attempt to bring companies to the public markets in an easier glide path. So that, in Washington, that conversation is happening, and I think to the extent that the Saudis can help stimulate that, that would be a good thing for everybody.
Well, what do you think the biggest hurdle is for, say, a Saudi Aramco listing, for example? The one thing that you feel like is a big impediment?
I don't want to speak for them, but I will say that it's not easy to be a public company for many people. I personally enjoy it. I personally think it's rewarding to be a manager of a public company. I think it's amazing to stand on the podium and ring the bell of the New York Stock Exchange. It's a symbolic event that says you have been a young person, a teenager, and you are now acting as an adult. And being an adult comes, as we all know, with its own benefits.
But it also comes with some issues and hurdles. So if you were another company wanting to list on the NYSE, what would be the one thing that you might say, ooh, that's tough, might not work for me?
I'm very bullish. I really think being public is a great thing. It puts a certain discipline on a company. People don't voluntarily want discipline. Once you have the discipline of the market, it's really rewarding because it forces me and my management team and others like us to make tough decisions. And I get the sense that people want to avoid that, but honestly, at the end of the day, it's best for the company.
So you're a big player in the exchange business. You have like 3 other rivals that are often talked about.
Right.
How do you keep score? How do you win in that game? What do you have to offer that they don't? What's your advantage?
You know, my shareholders want to see the company grow. And so that means constantly reinventing yourself. And so I look at where are we now and where do we need to go and how do we get there before my competitors can get there.
But when you talk about growth, you traditionally, correct me if I'm wrong, have done it largely by acquisition. Are you going to continue to acquire, and if so, where do you look to acquire, or is it going to change to organic growth?
We acquire analog businesses and we bring digital technology to them, and so we bring organic growth with each of those acquisitions. So there's a balance in there, and what we look for is, can we continue to find these, analog parts of the market and put technology in?
Cryptocurrency futures contract on one of your exchanges. When will we see it?
I don't know. I think there is a trend here that we can't ignore, in my mind. So I don't discount it. It's early days. There is something about technology today that many people are more comfortable with it than they are with the institutions of government and society that I grew up with. People put more faith in a guy named Satoshi Nakamoto that no one has ever met than they do in the U.S. Fed. That's an interesting trend that I don't think you can ignore. People in your city avoid getting into a taxi that's been inspected, that has a medallion, that's been certified, and will get into a car with a nameless driver because that person has 3 thumbs up. And we don't know whose thumbs they are, we don't know how they got there, but there is this comfortableness with technology that you can see.
It's
and
coming. It's coming?
I wouldn't rule out anything around currency.
All right, thank you so much. It was a real pleasure to see you. Jeffrey Sprecher, CEO of Intercontinental Exchange.